Okay, good afternoon. My apologies for the delay. It's 12:10 p.m. January 7th, 2019 for midday trade review. Today it's going to be fairly quick. I'll have you out of here within the hour. If you can't stay, I'll send out the charting and guidance this evening. The one from Friday I didn't send out. I'll do that today also. First thing I'm going to look at is oil, and then I'll flip into some of the others like volatility and possibly Bitcoin, silver, and maybe a few more. Equities I'm not going to get too serious about until we've started to publish Tuesday night. We wanted to let Monday and Tuesday settle in. If you have any problem hearing me, go ahead and send me a note. So yeah, we want to, the time cycle was ending around December 20th with a week either side, and then we had holidays, and I've explained this already a few times, so I won't go into detail, but bottom line, and it's in a guidance report that I put out, bottom line is that we want to see Monday and Tuesday settle in. There was some really good guidance from some of our senior traders this morning in pre-market and at open. And I appreciate that toward the equities shop and ROKU and a few others. So we're going to do oil first. Equities we'll get into deep dive in those by midweek. And I'm going to look at a few others today. I'll get the charting out the midday from Friday and today's later today. So don't feel obligated to stick in the room. A little more guidance here real quick before I get into oil. We're looking for $50 on FX USOIL WTI. It came within, I think, 24 cents today. I did put a guidance note in that the $50 mark might be a little too obvious, and so we may have seen the most recent top. There was a report out on oil recently that gives you the trajectory that I expect. Expect a bit of a pullback and then a run up into 52 to 55 as our next stop, and into May we're looking for a bullish scenario of 83. And I just seen today in the last hour OPEC put out a, not OPEC, the Saudis, sorry, same difference I guess, but a hope for $80 a barrel on their cuts, and so there's media toward that. And natural gas. So I was thinking about a short term. I apologize, I'm struggling with a heavy cold here. Natural gas, I'm looking for a short term long position on the inflection of a possible short term high in oil. I'm not typically a natural gas trader, but I do tend to get the inflections. I can't think of a swing I've missed in natural gas, but I don't take many. I might take 3, 4, 5, 6 a year, and so they're high probability setups. That's something I'm watching. Gold and silver, especially gold, I think you're going to see soft. However, if oil turns down here, between the time that it turns down and its bounce, and it's run to 52 to 55, so when it turns down, you'll probably see the markets turn back. You'll probably see volatility up. You'll see oil pull back. The dollar's probably going to get a jump. And gold and silver, I can't tell you for sure. And Bitcoin. So when that pullback happens, I might long volatility for a short period. I might long natural gas for a short period. I may long the dollar for a short period and short the S&P for a short period, maybe. Then when I think oil is going to turn back up in accordance to that structure I sent out, that trading plan, then I'll reshort volatility, long the S&P, long the equities we're eyeing that are to come on the report. Silver, gold, and Bitcoin, I don't know, and short natural gas at that point, at that inflection of the turn up in oil. Now, earlier today, we did take a trade in oil long. The machine trade activated because there were some machine programs that came in at the break of high day, and I'll put the charting in and the trade alerts from that in tonight's report. The reason why the machine activated was simply there were buy programs identified in the market, but they turned almost instantly, and that was a high frequency program. So when the machine trade is signaling long or short, high frequency, you have to be very, very careful because those machines will turn quick, and that's what happened earlier today. And there's no way Jeremy can signal that until the automated APIs are connected to the trading room. So you as a trader have to be very, very careful with that. I then followed after the initial pullback when the machines had flipped, and then they hit the pivot and bought again, or at least it looked like they were, so I went long. We did well, but it wasn't great. But I'll tell you why. We did okay. It wasn't great, but we got it. I'll tell you why. The main motivator behind that, for me personally, forget the machine trade, was that in exceptional circumstances, especially when the market all knows that the target's $50 short term, you can have a scenario, one of two scenarios can happen. It can sell off really heavy, of course, which is the obvious. But what can happen is it can catch everybody so one-sided short term that you can actually go a double extension in a squeeze. So I knew my risk reward was high because I could exit anytime I wanted to. And my potential reward was actually in the 52s. I didn't signal that, but that's what it was, even possibly to 55 on an extended squeeze. That's not what happened. We got the trade and we got an intraday, and it didn't quite get to the targets, but we got it. But that's why I was in it. So on a potential reversal in trend in oil, the most important thing for you to know is you're going to see trades at support. So on pullbacks at support, you'll see more and more of that as that develops. And you'll see trades at break of highs for potential squeeze plays. Those are the dangerous ones. The supports, if you're actually in a bona fide reversal on the larger time frame on oil, and you're going for the retrace, your highest probability is at those key supports. So that's where you'll see our major size. So two main trades in oil will be at support, in a reversal, at support, and at the breaks for the squeezes. But be extremely careful with those breaks and squeezes. The other thing that you'll see is you'll see the algorithm quad trading, the intraday. So those are the three main trades that you're going to see. We are going to get this publication out that gives you the rules-based system, but there's literally 2,559 rules. So what we're doing is we're simplifying it with the most high probabilities, and I just give you kind of a clue of what that means there. In a reversal to the downside, the opposite would be true. The shorting at resistance and the breaks to the downside. So that's basically what you're going to see from us. You will see some shorting, but not a lot, because at this point it looks like we've seen a bottom in oil. So that's kind of what's happening on a macro and trading plan scenario, and the trade alerts and how to manage them properly. If you have specific questions, go ahead and send them over to us. Email them if you can, compoundtradingofficial@gmail.com, and we'll reply to you and give you guidance as we can. This is that test structure chart. Now here in the reversal, see on the way down, the yellow lines were support and resistance, right? And all of that changed in here since Christmas. That time cycle I've been screaming out. On the reversal, you might see the opposite. These red lines might become resistance and support. You see how it was used as resistance and resistance here? But that's yet to be determined. We need a couple legs to figure that out. We're doing the work on it, the back test on it, but it's definitely been a great structure to work with. So you'll see more of this chart in the future. Once you get used to it, it's very easy to use. This trend line chart, the weekly chart, so this candle that I had pointed out that I was so curious about, that held the body just over that trend line, it's been a fantastic chart. And don't forget that 200 MA. Right now, you're at the retrace between the structured low, not the low, but the structured trend line low, and the 200 MA. So it doesn't surprise me we're seeing a stall here intraday. Now the target, of course, is up here. The first target at 55.70 area for February 25th. If it reverses and continues to sell off, it's 43.98 on the same day. Now you're probably going to see a 50% retrace to somewhere in the neighborhood of about 46.92 if this chart holds true, and the decision will happen to either go up or down from there. By the way, on this weekly chart, after it pulls back, if it does, and it gets to the upside again, your most probable target is actually that 200 MA on the 25th. I should note that, which is around 52. In a really bullish scenario, it'll blow above and hit that 55.70. So that's important. And that 20 MA would probably be even around there at that time. So this is the chart that guidance was given, and it's definitely one of my favorite charts right now. It's helped us identify, it's a simplified epic algorithm model we're going to use for sizing our machine trades. But you can see how close trade got to the 200 MA, and that was one resistance I had noted in the report. I'd noted all of these, this diagonal trend line, this fib here, 200 MA, this fib here. And so anyway, those are all noted. In the report, we noted that it could easily come back to this 47 area and then bounce. And I'm fully expecting, something close to that to happen. The 20 MA will come in before that, and that's probably where it's going to bounce. If it doesn't bounce at the 20 MA, the 100 and the top of the trading box is the area of bounce I'm going to watch for. But I think that's the consolidation you're going to see. The bullish side of that possible pullback is that the 20 is about to breach the 100, and the price is above, and especially over this trend line and over this fib, it could bounce quite easily into that 50 area. So it might not quite get there, in a straight line. It might seesaw back and forth. But I think you're going to, for all intents and purposes, I think you're going to see pressure here over the next few days. EIA might be the deciding factor, and EIA is going to come in right around where we think you'll see the bounce. Now the target to the upside relating to the 240 chart, your bottom of the next trading box is in that 52.80 range, and then 55s, low 55s is the target. Now that comes in on the 14th. But I think what's going to happen is you're actually not going to see that until, so you got pressure here. I mean, that could happen, but really the next cycle in here makes a lot more sense into the 23rd to 25th. But it's one decision at a time, and here's the test, and we're about to find out. The most important thing is the top of this trading box holding in a pullback. That's the important part to confirm a bullish structure. And if it does bounce there, gets up over previous highs, then the probabilities of the extensions that we're talking about being in play, especially with first targets in 52 to 55 and then possible continuation after that. The first targets are highly probable. You'll see us size in considerably if that happens. So this is the 1 minute oil chart, FX USOIL WTI, trading 49.08. I'm just going to wait for it to render here. This lag in charts sometime in the next week or so will be fixed when the new equipment comes. We're going to actual desktop PCs. The coding team, what we do is they actually are mirroring this, everything I do on here, and you know, everybody's in a different part of the world, and it's really slowed things down. Okay, so this is the 1 minute testing VWAP. Typically in intraday oil, if you're in a reversal scenario on the wider time frames that I'm discussing, then you can look for price to lose the MAs, look for it to lose VWAP, and then look for another hit up, and that would bring you somewhere in around 48.70 today. If you're not in a reversal up on the wider time frame and you're in a downtrend on the wider time frame on the daily or weekly, then you can look for this to dump like you've seen it dump and waterfall. But there's not much to talk about on the 1 minute today. And then on the epic model, what's really important here to note is that during the holidays, there's days of trade missing. So the models get messed up, and it's not just us that struggles with it, it's everybody. But the structure's coming back. So anyway, will you see them? Will you see the updated model and report tonight? I don't know if it'll be tonight or tomorrow, but it'll be tomorrow night at the latest. And then it'll be a little for the next week, not far off, a little funky, and then after that it normalizes again. So there's not a lot to talk about there. It is at support in the quad structure. If I had to guess, you're going to see it come down. Well, there's your 48.70 I was talking about. I wouldn't be surprised if you see 48.70 here today. Okay, so that's oil. You can refer to the reports to get the the complete details. What I'll do is I'll in those reports I'll put my or in tonight's report from Midday of oil, I'll link all the reports and I'll put the various charting and the trade alerts and everything in there, so it's a nice little package for you. Okay, so I'm going to shut down the recorder and come back in a few minutes.